Here are the money mistakes even the wealthy make and how you can avoid them. I'm Charlene. I worked in banking in London with the world's wealthiest, and I'm an energy healer, showing you how to master your money and energy. Just because someone has money doesn't mean they're financially bulletproof or know what they're doing. And some of these money mistakes are way more common than you think, even amongst the wealthy. I've seen it happen. So here's the money mistakes that even the wealthy make and that can apply to anyone. So let's learn from these lessons. Let's go. Number 1, trying to time the market. When investing, people still try to time the market, try to get in when the prices are low and sell when the prices are high, and play this never-ending game. But as Kenneth Fisher, the American billionaire chairman of Fisher Investments, says, time in the market beats timing the market. We say this all the time in the banking industry. The reality is that while trying to predict the perfect moment to buy or sell, it can sound tempting, but most investors end up losing out when they do this. Historically, the stock market grows over time, and missing just a few of the best days can drastically reduce your returns. So instead of chasing the highs and lows, focus on just staying invested for the long term, diversify your portfolio, and let compound growth do its thing. Number 2, not diversifying. This can be being overly invested in one sector like tech, healthcare, pharmaceuticals, or heavily invested in one country, one geographical region, or having all of your money in just one stock. Diversification means spreading your money across different investments, so if one underperforms, the others can help balance it out. It's like having multiple lifeboats. When one investment sinks, the idea is that there are other lifeboats that may help keep you afloat. It's not just about reducing risk, it's also about giving yourself a better chance to grow your wealth consistently, no matter what the markets or the economy throw your way. So by not diversifying, you might be putting all your money into one place or putting all your eggs in one basket. For example, if you like the tech industry and invest in a few tech stocks, for example, that portfolio is a tech-focused portfolio and not diversified across different industries. So say if an event or something happens in the world that impacts the tech sector, that whole portfolio might get affected because it's only made up of tech stocks, as opposed to being diversified across different industries like healthcare or industrials, materials, or financials, for example. If you want me to go into more detail about different stock sectors, let me know and I'll make a video. You can check out my Investing for Beginners video somewhere linked in below or linked up here. It'll be linked somewhere. Number 3, not having an accountant or a tax advisor. Accountants and tax advisors are like a superhero team supporting you and could help you save thousands. Having an accountant, a tax advisor, someone that you can trust is useful and can help you save money, especially when looking at starting a business or if you're looking to move countries, or simply to have an initial conversation to see where one could be more tax efficient with their money. In the UK, you can often have an initial consultation with an accountant or tax advisor for free. Here's a website that I like to use when looking for an accountant or advisor in the UK. Okay, so let's give this a try. Let's just type in unbiased.co.uk into your browser, and here you have your homepage where, as you can see, you can either pick a financial advisor, mortgage broker, insurance broker, and accountant. So for this example, let's go with accountant. And at first, just click continue, and then you can either select if it's for your business or your own finances. So let's say own finances, and let's pick capital gains here, and what other services do you require. So let's just say income tax as an example, and click next. The next page says which of these describes you best. So 1, finding my first accountant, I want a new accountant, I'm comparing accountants, or I have a quick question to ask. I've never used comparing accountants or the quick question function. I wonder what those do, but we're just going to click find a first accountant. Now here, next page, you just type in your annual income before tax. Please tell us what you need help with. So I'm just going to say looking for a new accountant. Click next. Just enter your email and they'll email you, I think, when they find a suitable match with an advisor. I'm not sponsored by Unbiased, but I really like them and keep telling people about them. My opinion is it's worth having an accountant or an advisor, a person that you can contact when you need. If you don't understand, say, how to structure your business setup or your side hustle business, or to understand if you're being tax compliant, or what you can do if your circumstances change. It's nice to have a contact just in case something happens or if you need some advice from a professional. So it might be a good idea to find an accountant or an advisor in your local area that you can go to, that you can contact when you need. Number 4, financial literacy. So that's not educating oneself or children about money. You might think, I'm doing okay financially, so why should I worry about learning more about money or teaching it to future generations? But here's the thing, even wealthy people often regret not educating themselves or their kids more about money sooner. If you don't know how to manage money, grow it or invest it, it can slip away faster than you think. And it's not just about you. If you're someone that has children, your kids are watching and learning from you. Imagine handing someone a tool without teaching them how to use it. Money is that tool, so the fact that you're here watching this means you're already ahead of the game. So why not take it further? Learn even more about investing and saving strategies, even look at how taxes work, and you can pass that knowledge on to future generations or even your kids, family, people around you. You can share knowledge by sharing this video to a friend and subscribing. Number 5, insurance. So thinking about health and life insurance too late. Stick with me, it gets interesting. So big mistake I've seen in the past is not thinking about health and life insurance until it's too late. I've seen people with massive mortgages, cars, houses, the whole lot, but if they get hit by a bus or get a serious illness, they would be in a financial disaster. The reality is that life happens. There are unexpected issues, different circumstances, maybe medical bills, accidents, you name it. And without the right insurance, your assets, whatever you worked really hard for, could be at risk. That house that you worked so hard for, you might have to give it up to cover the bills if you don't have something like mortgage insurance in place, for example. Or what about health? Health insurance could be the difference between manageable expenses and crippling debt. Look, insurance is about protecting everything that you've built. Check out what options work for you. Does your company offer insurance perhaps? Or if you already have insurance, what are you actually covered for? I've seen people waiting until someone gets ill before looking at insurance. But here's the sad thing. The insurance costs are much cheaper before you get ill, and some companies may not even insure you after you get certain illnesses. You might be seen as uninsurable. So don't wait until you're in a tight spot. Get your insurance game in check and you might thank yourself later. So those are the top money mistakes that even the wealthy make. If you found this video helpful at all, hit that like button, subscribe for more on how you can master your money and energy. See you in the next one, guys. Bye!